Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 16th of December, comes to you from London. And we're getting in the Christmas spirit now. Another week to go before Christmas, weekend after next. And the big question is, will we get a Santa rally? And normally you can rely on markets to do quite well. You go away just before Christmas and you come back in the new year and everything has gone up. But this year might be a bit different, and we'll explore that. A lot of red on the screen this morning. I'm wearing my red shirt just in line with what the market's doing, and that red is just telling us it's been a bad week for equities. And no big surprises. I put this up on LinkedIn earlier this morning, that US stocks, the weekly chart on the S&P 500, the middle of this year, went through below the cloud, and so we are basically in a bear trend. And for that to happen, you get a lower high, lower low. The only way you can fall through the cloud is for that lower high, lower low construction, really. And we're now seeing that we hit the buffers right on trend resistance. And this is the week, of course. That candle there is the weekly candle for this week so far. We're seeing the futures down further, so it's probably going to be an even bigger weekly candle, and we've just hit the buffers. So the chances of a Santa rally taking us out of this trend are probably quite low this year. It normally works, but maybe not this year. But we are in this bear trend. We're at the top of the bear trend, so that's not great news. And everyone's blaming the Fed for ruining the party, raising interest rates. But of course, this setup has been in place for a very long time on the weekly chart. So really, there's no big surprises that markets are falling away from these levels. Now, we'll start by looking at currencies, then global stocks. We'll look at some commodities, and then energy last of all. And looking at the dollar index, we're back below this 104 level. That's a critical level, and we are just seeing really that dollar index is just falling away. So whilst we were very bullish at the end of last year for the dollar in 2022, we hit that 115 level in September, and from then on we flagged in October when we fell through 110, which showed up on the daily chart that run in the dollar was over. We're waiting for new downside targets here. Notice that one of 103 was met. This is my weekly, my daily, my 60-minute, my long-term, medium-term and short-term view of the market with the corresponding point and figure targets. And of course you can run Updata on top of any feed you want on Bloomberg or Icon or there's dozens of different data services. It just gives you that extra power, and of course the ability to just go through 6 charts at once and have that view of the market is a very powerful thing, which is what I do every morning in Charts Today. So the Japanese yen is also just showing that dollar weakness below the cloud there. Sterling falling back actually. So we had a rise in interest rates in the UK yesterday, and the reaction to that through the day was for sterling to fall further. We got a downside target to about 116.40. So we are just seeing that run in sterling just coming to an end on the short-term chart. The medium term, of course, is still bullish, and the long term, we've got work to do to get sterling into a long-term uptrend. Against the euro, we're seeing that fall back as well. There was rate reductions in the euro, but the sterling has been hit the most, and we're just seeing that fall off there, so that's quite key. Looking at Bitcoin, we're sitting nudging that 17,000 level from above, so really just struggling there. And if we go back below there, we're looking for new targets to the downside. Of course, we've still got this target of 9,000 in place, so not looking great. The S&P was down 2.5% yesterday. The Nasdaq was pretty hard hit as well. So we are just seeing here markets in bear territory on all 3 time frames. The Nasdaq is in bear territory. Downside targets there 6% lower, 2% lower. We do have an upside target here, but we need a new high to activate that. Looks unlikely in the bear trend that we're in. So looking at the futures today, we're down 1% on the S&P future. So the market, having fallen quite heavily yesterday, is set to open even lower again today, ending really a pretty bad week for US stocks. Looking at the FTSE future, we're down 1% here today, just diving lower there. So it's interesting that that's happening in the UK, in line with what we're seeing happening in sterling. The DAX in Germany is down 0.8%. Again, it's diving lower. Having hit resistance really on the weekly cloud, we're now falling away. Downside targets met. You can't ignore the targets. Japan was down 1.3%. has been a strong performer of late, but just falling back into bearish territory. Of course, Japanese investors will be looking at the Ichimoku clouds quite closely. The Hang Seng was really the only market to buck the trend. It was up 0.4%. The Shanghai Composite was little changed, and the Sensex in India was down 0.75%. Still the strongest looking market, having made new highs. And with big upside targets, India is still looking pretty strong. And the S&P Australian ASX 200 index was down just over 0.75% as well. So we're seeing equities pretty much falling across the board. A look at some of the soft commodities. We've got wheat just a little bit up. Gold is actually up. It dived yesterday. We saw everything, really. It was a sell everything day yesterday, and we did see gold falling lower, but it has found a floor. The key thing is that gold needs to hold this 1730 level in order not to make a lower high, so just watch for that. Silver looking pretty strong as well. It's fallen back through the 23 mark, but the trend is looking very strong for silver, and looking at platinum the same. The odd man out is palladium, not looking as good. Looking at the US 10-year yield, still sitting at 3.5%, the same on the 30-year, so really well below the Fed funds rate of 4.5%, so that's quite key. Now, looking at the energy mix, a lot of red on the screen here today as well, and in fact we went out this morning as, if we look at today's call to clients, we went out as bearish pretty much on everything. And looking there, emissions we saw lower, and looking at the charts here, we said this 85 euro level was critical. We had the targets. We went out first thing to clients this morning, predicting really that would break. So we said the downside targets would win today. Same for US Nat Gas, and we're seeing some pretty big falls in there. And if we look at the alerts, quite interesting that we're seeing those targets kicking in on the charts. So quite interesting there that we're seeing emissions pushing towards those targets. A little mini upside target. This is the 1 minute chart. Remember, if you're trading, these alerts are quite useful. But then coming back and just looking at the overall picture, crude oil's down 2%. We were bearish there. That's happening. Even though we're above the cloud, we could see that falling away, downside targets there being met. WTI similarly lower, down 2% as well, and just nudging below the cloud there too. And the medium-term trend is bearish. Notice that target of 74.30 was met. All those little mini downside targets we saw at the open this morning now being met. You really cannot ignore the targets. US Nat Gas down 5%, was down as much as 8%. Again, we were bearish here. We had these little targets. We couldn't ignore those, and we just really couldn't get through that $7 level on US Nat Gas. Emissions, we said that 85 was the critical level. We predicted it would break today, and that's exactly what has happened. TTF, we were actually struggled a bit this morning. We were a bit neutral there because we didn't have the downside targets in place. They've since kicked in, so really interesting this moment those targets kicked in, which is why you need to watch the alerts and watch these charts in your system. So we are really seeing a fall away in gas prices, which is amazing given the cold spell that we've had in Europe. And that MBP, we were bearish. The targets were clear there this morning, and we were breaking lower to new levels. German power, less than 2 weeks to go on the Cal 23 contract, but again just falling away, nudging that low 300 level. And Cal 24, which is the contract that we're going to start looking at, has pulled back to 250, but we did make that higher high. The key thing is that we hold that level on Cal 24, so just watch those. That level 290 is really the level we break above 300, and we'll be bullish on that. And we also see a Nordic power is lower, down 4.5%. So really quite interesting that we're seeing European energy markets really just falling away whilst we've got a cold snap. Now, that's it for today. Quite possibly this year, I go to France on Monday, away for the Christmas period. I'll do my best to do charts today where I can, but I'll be probably struggling with a bit less strong internet. And I will be following markets for clients and certainly still posting what I can on LinkedIn. But if I don't see you, have a great Christmas, and remember, happy charting. 2023 has got to be a better year, but don't rely on that Santa rally this year. It looks, based on the charts we're seeing, it looks that we may not well see that. Until next time, happy charting. Bye for now.